Welcome to TradeTheNBI.com. This is John. This report is for the 24th of August, and we're looking at the euro right here intraday. Obviously, massive move up that took place yesterday has been fully retraced. And is there any particular reason why? Positive extreme still has a little bit further to go, but has filled its second one completely. So that was right on the money. And this is exactly why positive extremes are so important to pay attention to. Now, intraday, that's one thing for the euro, but we look at our daily from an ES standpoint. Well, I had talked about this that we still needed to come back down to the 41.18 range, potentially all the way down to 41.13 was the full positive extreme. And what's our low? 41.10. So, again, exactly why we marked them. We took stock of this as soon as it happened, when it took place, and pointed out that as soon as we got a weakness signal, that was going to be the retrace target. Now, the question will become on the MBI readings here whether or not this white accelerates. It's softening just a bit, and shorts from a DOC standpoint here at the side, pretty much at a peak. So this is what we talked about here, where the short-term buyers coming up. So what I say is it a time to cover within that kind of situation? Well, certainly partial, because we are still extreme histogram under the red line here. That's those deep magenta color below the negative 60. And that suggests more weakness to come unless there's some kind of power spike that's able to bring it. But we'll certainly see that intraday. But there's some potential positives with short-term buyers coming in, at least to hold the support. We're just going to have to see how that one unfolds a little bit. Doesn't change the fact that yes, we're still in a sell signal. None of that has changed. NQ looks pretty much identical from those reading standpoints, and the cascade here of that MBI coming down creates a full reset. So if it's able to hold right in this range, presents the potential for bounce. This is what that euro daily looks like, and it's still projecting weakness within that, being subpar. Um, you know, there was a lot made of the fact that we dipped below parity back over here, but we didn't close below parity. This is where the first time that we've actually closed below parity, and I think that's just endemic of what we're seeing in the EU area, where costs for electricity and that are going to skyrocket and basically just force businesses to close. They just won't be able to afford it. Some of the rates and stuff that Germany and they're starting to have to pay is just insane. France recorded its second uh, period of negative growth, and so there you have two of the largest EU members already in recession, and there's not much more that you can do with that. The question becomes, will the U.S. Start to fade that way? And the concern was this, that turnaround that we were seeing for oil right at the base, and now back up into the almost 95 range. And again, that's just going to spike the inflation uh, configuration. It's not that we didn't, it wasn't going to change. It was just the question of the rate of inflation and whether or not it was increasing um, exponentially or whether it was stabilizing. And in this particular case, doesn't look like it's getting any better. So at the best, you're hoping for a modest stabilization within that. And of course, the Fed continuing to talk hawkish. Nobody believed them. They all ignored it and created this, jump into lowering rates. And all we've seen is rates come right back down. The rates go up and TLT moving lower, and we expected this to continue and even break that 108, because if the Fed continues to do what it says it's doing, then rates are only going higher, and a lot of disillusionment will start taking place in the market, which we've already seen a little bit of. Fine, coming off the peaks, it's not that significant. This is by no means a significant pullback given what we saw from the positive extremes, it was all just a false breakout that just sucked in new buyers that were sold into. From a Bitcoin standpoint, still holding right around this 20. I mean, it's just been a flatliner for crypto for some time. It hasn't changed the fact that, ones like ETH here created beautiful little runs the other day. And then here we are in the post market. It's already seen some significant dips and buybacks. It's just very, very nice from a algo standpoint. And there's the 50K from that descent decay. We broke down to new lows, and then it's being bought up a little bit right here. We were minus 10 or 12, and now almost back to even, minus 2, 1. So it's moving pretty decent here from a European standpoint. From a 50K standpoint, this is where we are currently. You can see how erratic it's been in this real early European trade. But the exit of the day's trade was just to sell, and that was a continuation coming off some of these other prior sells during the day. I think it's all very nice action, especially for summertime. But leading up to September, when everyone starts coming back from holiday and stuff, I think it's just going to set up for the election trade, and that volatility could be significant. So we're going to have a lot of interesting period movements that are taking place, and you want to be prepared for them. And so this is a good time to be trading. That again, most days are. So, as long as you're getting this kind of ranges, I don't think there's anything to be upset about or complain, because it just gives a lot of movement in both directions. Sometimes either up or down. It's boring when it's just omnidirectional. So, we'll take the volatility, and it just lets you know that we're back more towards that mean reverting market that we really hadn't seen in many years to this extent. So I think it's a bit healthier. Still, we see some unilateral moves in singular directions, and that's usually news driven at this particular stage. As always, though, I will continue to update you on the Skype chat. Trade well. We'll talk to you later.